If you're building a software company, you're building a FinTech company. You just don't know it yet. And the companies that figure this out, they're capturing 3 to 5 times more revenue per customer than their competitors. Meet Rahul Hampole. The guy across from me has built embedded FinTech 3 times at companies we all know and love. Plaid, Yelp, and now running the entire FinTech operation at ServiceTitan, a publicly traded giant. He's seen companies 10x their valuation by adding payments and other embedded FinTech at the right time. And he's seen others waste months and months building the wrong thing. In this conversation, you're gonna get the one metric that tells you when it's time to build payments, the real take rates you should expect, hint, it's not what Stripe tells you, and why your attach rate probably means that you're doing it wrong. Whether you're pre-launch or doing 50 million or more in ARR, whether you're debating Stripe versus Adyen or building in-house, this framework will apply to you. We even built out an entire FinTech playbook for vertical SaaS founders exclusively from what we learned on this episode. So let's dive in with Rahul Hampole. All right, this week's Vertical Titan, Rahul. He's over at ServiceTitan. He is the GM and VP of FinTech there, but he's done an extraordinary amount in his career. I can't wait to dive into it. He's had some really incredible stops at a bunch of amazing technology companies that we all know and love, Plaid, Yelp, etc. So welcome to the pod, my friend.
Thank you so much for having me here, Luke and Nick. Really excited to talk to y'all.
Absolutely.
Likewise.
We're going to dive into it. If we can, just for the audience to get a little bit better grasp of you and your journey in technology and vertical software, do you mind just giving us kind of the high level kind of career arc and how you ended up at ServiceTitan and, the stops along the way?
Yeah, for sure. Well, thank you to your audience for having me over. I'm right now the GM and head of FinTech here at ServiceTitan, where we like to call ourselves the operating system for the trades. We serve everybody from plumbers, HVAC, roofing, and a variety of other verticals. And, FinTech's a big part of our business here. So I joined about 8-9 months ago here, but I've had a history in FinTech and in tech in general. I spent a few years at Plaid, where I used to be the GM for the payments business, as well as ran risk and a few other teams over my time there. And, had a huge opportunity to work with a lot of FinTech players in my time there, which was really fun and exciting. And then prior to that, I spent 8 years at Yelp, leading all kinds of revenue product, including the payments products there, but most importantly, founded and grew the enterprise business there. So when I started, we were working primarily with SMBs and, Yelp as a business. And I said, why don't we work with McDonald's and Starbucks and Target and everybody else? And over time, that ended up being, 30% plus of the business, which was really fun to grow from zero to that scale. So did that for a while, did advertising there, and had prior stops at Yahoo in the early days as an engineer in my prior life as well. So gotten a chance to do a bunch of different things over the years.
So longtime FinTech guru, but relatively recent entrant to the vertical world, if I'm hearing right. Were there any kind of theses or hypotheses you had going in around, hey, this is the time to enter, or was it just ServiceTitan's incredible company? I love the people.
Yeah, it was definitely happenstance a little bit, because I was I worked at Yelp, so I had some familiarity with the trades businesses. A lot of those ended up becoming customers when I was at Yelp. And obviously I'd worked a lot in FinTech, and when ServiceTitan and I started speaking, they're like, oh, you can kind of merge these two together and, really serve our customers. And one of the awesome things about ServiceTitan is the incredible customer centricity that we have here. And so, that's something that's really central to what I like doing in my career. So it felt like the perfect fit that way. And what's nice over here is that there's so much green space. There's so much opportunity with our customers in terms of creating value for them in the variety of FinTech tools that we provide for them. And we tend to focus a little bit more upmarket with our customers. They tend to be bigger. They're a little bit more sophisticated. My enterprise experience from the past really helps in that regard. And they definitely have a lot of needs in terms of how we can help them from a financial perspective. And so that's what got me excited. And the vertical SaaS piece was icing on the cake in that sense.
12 years ago, I started a vertical SaaS business. Mm-hmm. And I remember going around to VCs, going around Sand Hill Road, and it was in the trade school space. So it wasn't, I guess it was a leg before they start using ServiceTitan, is when they're, getting their credential, their license. And I remember pitching VCs, and every single person was like, trade schools. there's no way this is venture scale, right? And so this is just around the time that kind of the Toasts of the world were proving the playbook that you can really go after one industry as you layer in, financial products and payments, and, the list is a long one now. How have you kind of seen that evolve from your seat? Obviously you were at Plaid, so you probably had some exposure to a lot of different businesses, and then now making the jump to ServiceTitan, who has proven this to be very true, let alone that they're going after, home services is a massive vertical to begin with, but the FinTech stuff only makes it bigger.
The common thread, which I saw at Plaid and I saw at a bunch of vertical SaaS companies, as well as I see it in action now when I'm living it every day is in ServiceTitan, is like, you start with your customers. You start to ask them like, hey, what is the core need that you have that you're able to either like not be able to serve real well today, or you're doing it with somebody today and it's not working as well as you want it to be. And often they'll tell you. That's the beauty of vertical SaaS in some ways, is that your customers are your biggest feedback loop. And to the extent that you're creating value for them, they'll tell you what else you can create value for them for. And so, in the early days at ServiceTitan, it was, when I talk to people who've been around for a while here, they're like, the customers are telling us like, hey, we like what you're doing for us, but we'd love for us to like collect payments through y'all. Like, and it just makes total sense. And so it very quickly became obvious that we should go build like a payments product. And that's kind of like evolved into multiple things. And we can talk more about that. But it's the same thing that I saw at Plaid over and over again, that successful companies, partners that we worked with, customers that we worked with, were really good at hearing their customers and trying to understand like, hey, what is the next need that they have? And what's the adjacent value that they can create for them? So I think that's one part of it. I think the second part of it is like, a lot of vertical SaaS companies fall into the trap of like, oh, that's a shiny FinTech thing that I should go do because it has a lot of, big take, or like, a large take, or it's got like some other thing that other people are doing. And it's like, so why don't we do that? Like, and instead you should always ask yourself, like, what is the unique value proposition that you can create for that customer because they use that product through you? Right. And that's a really important thing. And if you don't do that right, then there's no value creation for them.
I think that's a great angle here, Rahul. Maybe if we could, just kind of keep in mind a lot of our audience, they're, founders, could be ideating, could be growth stage, but just thinking about, I have a core software AI product. I know that payments or financial services in some regard is a big part of my TAM opportunity. How do I think about sizing that opportunity? Like, what is interchange? What am I going to make on top of that? And when it should layer in?
There's a lot of questions behind that question. So let me try to break that down a little bit.
Thank you. Simplify it for us.
Yeah. I think the first part of that question is like, what kind of FinTech product is the right product for my customer, right? Second, what is the value that I can create for that customer? And how much of that value can I capture for myself? And that leads to all the TAM and the opportunity and all that kind of good stuff. And so the first question you got to ask yourself is like, what is the core financial need that they're trying to serve? Like, often it's payments, it could be lending, it could be capital, it could be a bunch of other things. But, you have to ask yourself, what is that one thing? More often than not, it is transparently payments in the vertical SaaS space. Now, the first thing, so that's the first question, right? The second question is like, okay, and then you go figure out like, how big is the opportunity there? Like, is it like, hey, you know what? 80% of your customers will adopt it. 90% of your customers will adopt it. Is it 100%? Why not? Like, you have to answer those questions. And the second question you have to answer for yourself is like, what is the additional value you create if it's integrated more deeply into your stack? Right. In the case of ServiceTitan, that was like, hey, we do a lot of things to make their accounting easier, for example. We do a lot of things to make their end of month reporting and understanding how their business is running. We're an operating system, as I said. So we do that really well for them. And so that's the value creation, is one of the examples of value creation. But you have to find that each vertical SaaS player, what that is for you and what that product adds in terms of that. And that leads to the third part, which is like, how much value do you create for yourself? Because the deeper that experience works, the deeper it is in terms of the value that you can create for yourself. And I like to use Toast as an example because they're a fantastic FinTech provider in the vertical SaaS space, right? And they've done incredible things in how that payments experience works with the rest of their software. They do a fantastic job in terms of like offering capital to the same small businesses, restaurant owners. It's an end-to-end offering, and as a consequence, the value they can create for themselves is substantially more. And they all tie in together in a lot of ways as well. So I think that's how I try to break the problem down, and that allows me to give a little bit more confidence that there's a real value here. And then you you kind of experiment and kind of grow from there.
Can we just go into the weeds for 1 second on, if you're an early stage founder, you're not able to necessarily do or take as much as you might if you're a mature company that can maybe absorb some of these functions. So maybe let's just for 1 minute dive into, again, like interchange, what partners you could use today when you're an early stage startup, but maybe how you can capture more down the road just in terms of that payments piece.
Yeah, it's a great question and something that I'm constantly thinking about a lot because, embedded fintech was not a thing. Like, I don't know, Luke, when you were hitting Sand Hill Road back then, it was not a thing, at least to my knowledge. And now it's like in every part of like the fintech stack, there's an embedded fintech player today in some form or the other, right? And, I think it is, if you go back and look at the history of, I'll use payments as an example, Nick, but we can talk about that. If you look back like 15 years ago, there were a lot of like payment processors. There were, PayFacs, there was ISO, ISV players. There's a lot of these different pieces. And if you're a founder and you're trying to start, you're like, I don't even know where to go. Which player do I work with? Like, what should I have in terms of like my take expectations? What does interchange look like? And today you can go out there and you can be like, I can go sign up with Stripe or I can go sign up with like Rainforest or someone else and pretty quickly get started and get a pretty compelling offering out there in market. But there's a trade-off, right? The trade-off is like, hey, what does it take that you end up having? What flexibilities that you end up having? What ways that you can create experiences and how much control you have over those experiences? Like all those kind of become a trade-off conversation that you go make. My recommendation always to founders is like, you need to show value to customers and you need to show it yesterday. Not like, oh, you've got a plan 6 months from now, especially in today's world. Like, that's the whole point of AI is that everything happens like a day before you want it to happen. And, our expectation should always be that we have to like make it as quickly as possible. And even if doesn't lead to the optimal take outcome. Because guess what? If you can prove customer value, then the pie gets bigger over time. But then you can start to optimize that pie with a lot of different ways. You can be like, what? I'm going to use a different vendor tomorrow that has a slightly different structure with more customization. For example, we work with Adyen as an example. And Adyen's definitely leads more enterprise heavy. They have a lot more controls and things like that. And so you get like the ability to do interesting things with them that you probably can't with like a plug and play kind of experience possibly. And so that leads to different take outcomes, for example, versus one of those earlier stage situations. And so that gives you like different controls, different outcomes from a take perspective. So I always tell founders, optimize for the customer, get the product out there, get them to use it, and your focus should be attach and usage. If you can optimize those two metrics up front, and then you can worry about take later. And if you can do that, you'll build a great business for yourself.
That's fair. Maybe just final point on this, very broad strokes, like what sort of take should you expect or what should you expect to give up very early when you're starting versus what might you be able to get at full scale? So, I'm just thinking you get started with Rainforest, maybe use them forever, maybe you try to in-house some of this stuff.
The exact numbers definitely depend on every vertical and every if you're trying to go for an interchange plus model versus a flat fee model, and so on. If you're a vertical SaaS player and you're able to get and you tend to focus a lot more on SMBs or smaller customers, I think aspiring for 80 to 100 bips of take, I think is a very reasonable place to start from. Right. And obviously, as you become bigger and you get more sophisticated customers, those things can change over time. But I think aspiring for that, I think is a good outcome. It's in the card business. Obviously it changes if you're you're doing ACH and other things as well. But that's probably a good place to at least aspire for to begin with.
I remember I made a controversial decision where I found kind of a no-name company that was willing to give us 1.25%.
Yeah.
And all of my engineers were up in arms about it because they wanted to go with Stripe. But I think I was getting 60 basis points with Stripe. And I was like, I'm sorry. If it takes 6 months instead of 2, we got to do it. It's significant difference. And so that's a constant battle for founders. I probably should have found something a little bit more Stripe-like that was, maybe in between those two. But
yeah,
it helped when we on the PE exit for sure. Because I could show the bigger take.
Again, it's a question of also to your point, Luke, of what is, if you're building this business as a VC backed long-term business that you're trying to build, if you optimize for take on day one, you're going to get like effectively trade-offs that you have to go make. And I've seen those companies and they struggle a lot when the going gets tough.
Yeah, no, I think that's right on. So beyond payments, what else are you excited about? I mean, obviously payments is a giant umbrella. So like, what else kind of sits in your purview? Like what things are you seeing? What embedded tooling or things that founders should build in-house that have kind of a similar effect as payments does?
Yeah, I mean, I'll give you the story at ServiceTitan. We obviously had a payments offering for a while, and then we started to hear from our customers that who are contractors, and they're like, hey, we're going and offering big ticket install jobs. We're replacing an HVAC unit, we're replacing a roof, and it's pretty important for us to offer financing. And often we're doing it outside your platform. And so, we started to build out a financing business. That was a core need. Like similarly, customers told us this is a need for us. We could do it better if we worked with you. And so we ended up offering, we partner with a bunch of providers in that space. And again, it's an embedded experience that we power, and it's really powerful for our customers. Again, we can do it in a way that really, you're at the kitchen table, you're trying to replace a roof. It's a pretty expensive job, as you can imagine. And, we have to make it really simple and easy for the technician to be able to explain, to be able to understand, provide compelling price points. A technician's by no means able to understand all the APR dynamics and what a no-fee loan versus a fixed fee loan versus a 36-month loan. Like, I can't get half of these things. So, imagine trying to translate that in a way that's really easy to understand and convert that and explain it to an end consumer who wants to go sign up for that, right? And so that's like an example of something that we ended up like building as an adjacent offering. But when you talk about founders, there's so much out there now. You can go get an embedded capital product and, Paraffin, for example, or, you can go work with folks who are doing, embedded consumer financing. There's so much, we announced a partnership with Affirm, for example, that we are doing some stuff around buy now, pay later next year. So there's some pretty cool stuff that you can go do with a lot of different providers. It's all about like, hey, to the point earlier, what's the value prop that you start to create for your customers? And more often than not, they'll tell you what they want.
Yeah, it always needs to start at the customer level. If you're starting at the cool, shiny tech angle, it's probably not going to end up in a good place. If the customer has a specific need, like in your guys' vertical at ServiceTitan, there's a very clear need around, financing. Like you said, a remodel is not cheap. Yeah, that makes a ton of sense.
I think one thing, Luke, maybe I don't know if your audience cares, but one of the struggles that you often have in my seat is like, when is it ready? When are you time to go try the next thing out? Because it's hard, right? You're like, have I figured this one out? But there's like this thing that everybody's telling me that they want to. And, do you go and the timing is super critical. And I think to me, the way I try to figure that out is like, hey, is my attach starting to feel like, just feels automatic. Like customer pull is pulling me very, very strongly in the current product that we have, that I don't need to spend a lot of time like building demand. And if I can do that, then it's the right time to go be like, okay, I have the next adjacent product that I have to go figure out.
Okay, this is a beautiful topic. I love this. So there's like a strong opinion I have on this, and it's the same question is basically, if I have one product and I'm going multi-product, like how do I make that decision of when to go multi-product? And on one end of the spectrum, you have when you've built every freaking feature and every customer absolutely loves it. And then on the other hand, you have like, it's in like the churn zone, right? Like people are falling off like crazy. So you started on it a little bit, but I'd love to go deeper. Like my view of it always is, you invest in something to get it doesn't have to be like extreme customer happiness, but it needs to be a stable product. You're not seeing, any more attrition than you normally would, right, in other parts of your business. Now it's time to move on to the next one and kind of, move that forward, the previous one forward incrementally, but not continue to invest a ton of time and effort. That's a super tricky thing for especially earlier founders to weigh.
Yeah. And I think especially in today's world, it feels very easy to be like, I'm going to do that embedded fintech thing and this embedded fintech thing. And a lot of them will be like, we'll do 5 things for you together, and you're like, which ones do I like turn on and activate? And how do I get my go-to-market motion to work with them? And especially if you have a PLG motion, oh my gosh, like do you stick everything together? Do you start bundling? Your head's starting to explode now, right? And so, again, I might be the minority on this one, but I really believe that like, you got to nail one thing at a time. You got to get your ICP right. You got to make sure you get that ICP to like start attaching to your product pretty well and using that product really well. And there's like that inflection point in the S curve where you're like, you know what? At this point now, I am not doing so much work to sell every customer. I'm not doing so much work to onboard every customer, get the customer to use it. And you will feel it in the product. You will feel it in that journey. And when you get to that place, then you're ready to go to.
Is there anything quantitative that you can do to know that you're there as a founder? Or is it really qualitative? It's like, here's the S curve. I feel it.
Again, every vertical SaaS has its own like measure of like what attach should look like, what usage should look like, right? But I would say in general, like you want to start to see that like you're starting to see step function increases in attach. And if you can start seeing that, I think you're there. And similarly, step function and usage. And usually like with FinTech products, especially your time to usage should start to go down.
And that's the silent killer in FinTech is the time to value can be super dangerous. You can sign a payments contract and it can look like it's, $100 million of GMV and you guys are all high-fiving in the office and you forget you got to roll that out at 500 SMBs, right?
Yeah, exactly. Right, exactly. So you have to start to see that usage and that time to live piece has to start going down. And if that starts happening and there's like a step function in that, and at that point, the product's working. Your go-to-market motion's working. Then it's all a question of like, hey, how do you throw fuel on the fire? And that's often like a go-to-market fuel that you have to throw. Obviously, there's things like pricing and like product features you may want to keep building. But at that point, as a founder, you should be asking yourself, like, what's the next thing that you can start to build on top of this without losing focus too much?
How do you, let's say you're a founder and you hit that point, you're getting that step function and attach rate, you're feeling good. Now you say, hey, I think our customers really want lending, embedded lending. What is your process for testing that? Do you start with a particular cohort? When are you ready for prime time and full, production?
One other thing I'd quickly add to the last point was like, you need to have a team that you trust who can take that thing that you've not owned and ran a little bit with to now driving it up the S curve.
Right.
If you don't have that, you know what? In 3 months, you're going to look at it and be like, oh, that didn't work. But coming back to your question, Nick, about like what's the next piece and how do you figure that out? I always tell founders, like, you should have like 20 of your best customers on a text channel, WhatsApp channel, whatever, where they're telling you very, very transparently what's keeping them up at night.
And this is when you were like, hey, you guys are super users. We're going to give you early access to this new thing, or
even before that, as you're building
pure
your
feedback.
Just pure feedback channel. You have to have that, right? For your business in general. And guess what? That is your like trusted circle now. And they will tell you when they're like, hey, you know what? I'm trying to figure out this, if I should be getting capital. Like I'm borrowing from this bank. They're charging me too much money. Or like, I'm doing this thing with this revolver thing. It's okay, but it's so cumbersome. Or like I'm doing this other thing, which is like acting up. I have my team managing it. It's not working that well. Yada, yada. Like they'll tell you. Like they'll start complaining very often, or you can often ask them like, hey, what are you doing with like managing your capital today, right? As an example, and they'll tell you a bunch of things very quickly, and that gives you the context to be like, okay, what is my value prop to these folks, right? And the best way to validate if your product's going to work is literally to sell it, even before it's ever built, right? You have to have the ability to go be like, I have a mental pitch deck now. I'm going to go try that pitch deck out with these 10 people that I really trust.
As long as you do that, just make sure you can actually build it though.
Yeah, 100%.
Because I've done both of those things.
Yeah, some folks will be like, yeah, I have that coming next week, and that's like the danger. That's like, you have to be honest with yourself intellectually and say, you know what, I'm trying to ask you the question: if you had this product, would that be exciting for you?
Yep.
Right, and that's the way to do it. And then you'll have that. And then you can be like, okay, how do I now prove the MVP of that and go take it back to these 10 people that I have best buddies with, who tell me transparently if it's going to work or not, if they want to use this thing.
We wanted to take 10 seconds to call out our partner and supporter on Verticals, Paraffin. You already know why embedded finance is important. You want to power all the ways your customers make money and grow their business. but you don't want to be a bank, you don't want to be a credit card company, you don't want to be a lender. Parafin can help you with that. They help portfolio companies of ours, friends of ours, hundreds of other vertical founders increase retention, increase revenue, grow their TAM. So if you don't know Parafin, please take a second to check them out. You can go to parafin.com, that's one F, or the link is below this video. Thanks for listening, and back to the show.
I have kind of a theoretical question for you, or maybe an academic question. When is FinTech a commodity that works because the rest of your product is great and brings the customer there and retains them? And when is it a distinct, differentiated product in its own right?
Yeah, maybe I should start with that, is that you can't make FinTech work if the rest of your product's kind of like not working that well in the first place. You're a vertical SaaS player, you've got all these features and people are kind of using them, but they're complaining a bunch about them. They're like, the workflows don't work. Or if it's an AI vertical SaaS kind of play, then it's like, the AI is hallucinating half the time and not really doing what you want it to do. And you're like, you know what? Accept payments now. You're like, oh, dude, like the basics aren't working now. So foundationally, you have to get that right, to be clear. To go back to your question though, after that is like, my thesis always has been that like FinTech shouldn't feel separate. It should just feel naturally as a part of the experience. And it just feels like something that just needs to be done. Right? If you're again, taking that toast experience for a moment, you don't think twice when you're a restaurant owner that, you're buying toast, that you have to accept payments through it. It just feels natural. Because you know what? That's just part of the natural experience that you have to provide to your customers. Right? And it just seamlessly works with the rest of the restaurant experience, whether that be the front of house, the back of house, everything. And so to use them in that context, like, you just have to do it that way. Like, there's no other reason why you have to do it any other way. And so, but I think the failure mode is like, I built this entire like vertical SaaS. I'm just going to plug this payments thing in or plug this embedded lending thing in because you know what, that's going to make me 20 more bips or 50 more bips. Like that is the wrong way to approach it because it will fail, 95 out of 100.
No, I think that's really well said. I mean, I guess what I think about in that question is, I mean, either as you said, Rahul, your core product is just like they're gonna be there and they're already doing this, so it's a natural part of the product. I think what's really interesting too is sometimes when the FinTech brings new behavior. So maybe it's as simple as that payment is really not digitized, right? I mean, so we were talking with, Brian at League Apps the other day, and he does youth sports software, and a lot of his payments weren't actually digital before. Or maybe, your customer is so SMB that like access to lending wasn't easy. And so they just didn't have time. So in any of your experiences, have you seen that where the customer is just like, wow, I can actually do this? This is amazing.
Yeah. I mean, I'll give you an example from ServiceTitan. We just announced like a tap to pay product earlier this year. And, it's just a game changer for like the technician in the field because, they were like fidgeting around with like the old school, like, the puck to collect the payment, or worse yet, like asking for a check. And they're like, I can take my phone out, take a payment and walk out. Right. And, I talked to some of my customers and they're like, sometimes the technician will collect the check and they'll leave it in the truck and it'll literally fly out of the window. Like I had somebody literally go out of the window because they were driving down the freeway, the windows rolled down because it was,
vertical SaaS, baby. Yeah.
Yeah.
And, that should not be the world that we live in today. As an example. And so just like tactically, it should just feel natural that you're like, wow, that worked. That just worked.
The POS that now you can, like the iPhone is a POS now. I love that you guys did that because like I've seen very few vertical SaaS companies actually leverage that functionality, and it's magical. I think I've seen very little human beings leverage that functionality even outside of vertical SaaS, and it's very magical. Like, we should all be looking at that.
No, when you think about our space, it's incredibly convenient because the technician's always walking around with the phone. They always have one. And it's super easy for them to go make that happen. And so just like a joyful experience for everybody involved in that particular context.
So I'd love to, Nick, are you done on that thread before I interrupt you?
Yeah. No, I have a separate one, but you jump in.
Okay. So I'd love to move to go-to-market a little bit. I think FinTech go-to-market specifically around like sales teams and salespeople and sales comp is super tough. Like I just see everyone every year is like reworking it. So this is a big question, but like philosophically, how do you think about kind of salespeople comp when it comes to fintech, and if they're only, selling a piece of the fintech, especially with the ramp times that we all, know and love. And then secondarily, like do you incentivize the seller, or do you kind of more incentivize the CS team or your implementation team as well? I'd love to get your view of that.
This is a fun topic, Luke. Like we could chat for the next hour, I think, because it's there's so many variations of this that I've heard over the years, that work, don't work for a little while, like etc. So, and I think there's like 2 or 3 main schools of thought. I think there's one school of thought which is like, hey, if you really care about that attach, let's like really optimize for that. Let's like get like that fintech sales team to get that attach to happen. And maybe there's like a PLG motion or something of that sort that drives that usage behavior in some ways. So there's like one school of thought like that. There's the other school of thought, which is like, hey, you know what? You have a team that's really focused on increasing revenue, and that revenue is a function of attach and usage. And a sales team that's incentivized around that. They've got a book of business. They're kind of like motivated to kind of move that business in a certain direction. Obvious challenge with that is, guess what? Like more often than not, over time, that customer is going to grow, and you're incentivized, you're comping people for like just natural growth, if you will. So there's like piece of challenge as well. And maybe there's a third bucket of things where you have some kind of hybrid model where you're like, you're incentivizing for some part of it, but after the first 90 days, after that, you're not really incentivized for that customer's growth anymore because they're going to happen naturally. I like to think that there's no one right answer. I think it's like a reflection of where the company is, where the fintech product is, and where is it the right point in time, where the product is. Like when I say the product, I mean by, does it have a PLG motion? Is the type of customer SMB customer or more enterprisey customer? I think those are all decision variables. I tend to be very much in the belief that the more down market you are, the stronger you have to build the PLG motion to be. You have to get really good at driving attach usage, definitely, but definitely, if possible, attach as well through that PLG motion, so that your teams are set up to be really like driving, our sales teams are really driving like higher value activities versus like, hey, I'm going there to just get the customer educated about how payments works. That's how you should think about it. I think as you go more up market, you want to have sales teams, you want to have like especially consultative sellers who can understand the customer's needs, customer's wants, and walk them through that plan of how you can use a product, see value from the product, grow with the product. And from a compensation perspective, Luke, my take is that like you want to create that initial usage and so attach and usage to happen, but you can't comp people for that forever growth of that customer, is my take. And then again, to the other question which you had, which was like, hey, is it you comp the CS, you comp the fintech salesperson, is it both? Again, the cost of sales and the structure that you want to define for your team, I think is like something that everybody has to think about as a founder. I'm in the belief that like you almost should think of that as the CS is trying to drive warm leads, and there's some value that you create for them for that, not the entire value, but some value. And the salesperson is trying to convert that lead, and so how much do you pay them for that lead and for that initial usage? But it's not a forever thing in that particular context.
A good example here is Vori, and Luke, I think you're maybe a small angel investor in Vori. So they're hey, every check counts, man. They're a kind of financial OS, right? Like POS payments for the grocery space, right? These are, kind of big, complex deals. They do have some natural growth, but it's not PLG, and the payments is a big part of that contract value. And the reality is they may expand stores, but in order to do that, that's sales, right? So, Luke is a small angel investor. My sister is actually a sales leader there. So I've had this conversation with her of how do you structure compensation in a fair way? Because that's actually a pretty big part of, the lifetime value of that contract. But, so it can get really tricky.
100%. And I think this is where the natural tension of like, you want to keep your cogs in the right structure. You want to keep making sure that like your best sellers are motivated and incentivized to grow that customer and help them be successful. And at the same time, a grocery business is a very different business than, you're selling AI software that is growing at a very different clip, and incentivizing the right structure there. And the other thing I think we often, again, churn is a big part of this as well. Like, you want to make sure your sales team is not selling deals that are just churning after that, right? And the right structure to kind of have, whether that be, long-term value or there's clawbacks and so on that you have to kind of set up. I think those are all like things that you have to kind of explore as a founder.
Just to go a step deeper here for the audience, because I think it's helpful, and I'll just give my example. And Rahul, obviously, I don't know how much you can or can't share on this. Maybe it's more like looking historically at previous companies, but what we did is we had, for our folks that were selling payments into the customer base, we had like a couple hundred enterprise customers. And, the classic SaaS example is, I don't know, it's anywhere from 7 to 12% of first year, ACV or ARR. I think in our example, we comped similarly to that on the payment side, but they received I can't remember if we did 10% or 20% up front. And then they got the other 80% of that commission stake once that customer achieved kind of the full utilization. So then they weren't putting in some crazy GMV expectation and just trusting whatever the customer said. And they were also working. And then I think we did a spiff for the CS team who was in charge of the implementation once they achieved full implementation. And you had the sales guy kind of driving and pushing on that person because they wanted, 80% remaining of their commission check. So I think that worked. I don't think it was perfect. I think we had some headaches with it, but I think that was as close as we got, just as an example for folks thinking about this.
Yeah. And that's very consistent with what I've seen, Luke, is because you really want to incentivize a salesperson for the full length of the contract and the full length of the users that you want to go see. And maybe what I've seen in my history is that we put the salesperson in charge of creating that outcome. And the CS is there to support them and make them successful. But the salesperson is in charge for the first year of that contract fully. Right. And the outcome is tied to them. It's not tied to the CS person. And the CS after that is there to make the customer successful in that journey. But it was really important that they're effectively comped. Not most of their comp was tied to a flat basis. And there was a small incentive, but that was really tied to after the salesperson being comped fully. That was the way to think about it.
Oh, that's smart. So it was more 12. The salesperson was much closer the first 12 months than probably in my example. And then the CS person was much more comped after they had achieved kind of full utilization or target utilization.
Exactly.
Maybe switching gears for a second, Rahul, how do you think as an at scale, vertical SaaS organization, thinking about what product features you want to build and own in-house versus what may make sense as a embedded, vendor or a partnership, right? Where's that core competency line drawn? Because I think this features heavily in FinTech.
As a mature player, the dimensions that I always think about are does owning something create some unique differentiation for us that we otherwise wouldn't get with a vendor, with a embedded partner or whatever else? That's one. The second piece of it is how hard is it to do and maintain over time? And 3, is that differentiation something that stays forever, or is it something that goes away, over time in some fashion because these players can build, et cetera, et cetera. So I'll give you, we're not in this space by any means, but if you were to think about the world of capital, for example, and sorry, interest rates change and the mechanics of how lending happens or regulations are changing or something, would we be able to provide a better product if we built everything in-house and started to manage everything versus, going with an embedded player? I don't know the answer to that question, but that would be somewhat a version of what I would have to understand before I could make that choice myself. And there's regulatory complexity, you need to get an MTL, you have to be a bank or something you don't want to think about all that when you're a startup,
right.
Transparently, you want to avoid the regulatory hairball to the extent possible. And if you can keep it simple and still get most of the value, trust me, it's much, much better.
It's just an interesting, question when I think about, some of these point of sale lending companies, they see much higher uptake than you do on folks going out and just getting their own loans to do it, because there's just a different level of trust. Of course, you could still use embedded for that, but there's just a lot of interesting interplay between trust of like, hey, I already know this is my system of record, and, or I already know I'm buying here, versus I'm going to go do the same thing with an external bank. But we could talk about that all day. So Luke, take it away.
Yeah, no, I was just going to say the thing, and Rahul mentioned this briefly, but I think where it's so powerful, the embedded fintech stuff, or just fintech generally, is when you can tie it into like your vertical software data set, right? So I've seen a lot of people do really interesting things with inventory, right? So inventory, as you have folks updating the inventory is going down. Like they're literally firing off agentic orders that are using their embedded cards, right? And all of a sudden they're getting a piece of that. Like that's where I think most founders haven't gotten to this stage where when you can actually leverage the data set for your vertical SaaS in ways that just make fintech like hands off from the owner, like that's a very cool place to be in.
Yeah. And you have to remember, like most of the players that we as embedded fintech players, as vertical SaaS players deal with, our customers are not fintech folks.
Totally.
They're trying to run their business and they've got so many things that they have to go deal with. The last thing they have to go deal with is like FICRA requirements or like some obscure like data set, like, thing or whatever else. So Luke, you're 100% right. Like to the extent we can simplify that for them and it feels very natural in the product, it's a huge win for folks.
What's your view on all this like agentic stuff? We had, the ChatGPT announcement with, I think, Stripe embedding in there. Do you see, I'm sure you guys are doing a lot in experimentation around AI. I mean, do you see this kind of coming to vertical SaaS and folks kind of doing agentic payments and things in a more automated way?
100%. Like, I think the future will be, there'll be some form of like agentic payment experiences that start to happen. So I think two parts. One is like, it may not happen overnight and maybe, it's exciting to see these announcements, but I think the world where there's like buying experiences or interactive experiences happening through ChatGPT, I think or like other AI tools, for no doubt that will start to happen more and more. Right. And we can definitely see that like there's desire and need even in our customer base for that to play out a little bit more. So I think there's no question about that. I think the second part, is how much payments and fintech and other stuff activities happen through that. I think that's probably going to take a little bit longer to play out, but will definitely happen. I think there's more players there, right? Like, the networks, especially in payments, like the networks need to play ball. There's the compliance and regulatory parts that I talked about. There's the processors and the gateways and everybody else starting to play ball with it. What kind of consumer experiences, how much consumers will have comfort with that too, I think is like an open question. So I think there'll be a longer thing to that, but it will happen. And I always say think of this as a new way to do payments. Like, how long did it take Apple Pay for them to go their merchant adoption versus the actual consumer adoption, right? Like merchant adoption actually happened fairly quickly, but then consumer adoption took a while and then just kind of grew like crazy. And so you can expect a similar thing happening here where you'll start to see merchants embedding it and start to see some experiences. And then as consumers get more and more comfortable, it'll just start to happen very naturally after that.
That's a great thing for every VSaaS founder to think about is like, at what point does that come to your particular industry? Because you're right, the Apple Card thing, like by the time, Apple Pay really took off, I mean, it felt fast. It was like a couple years of no man's land and like a couple early innovative people. And you're like, what are you doing at the grocery store? Like that person's weird. And then next thing you know, everyone's doing it.
Yeah. And now it's like the natural, like you don't even think otherwise.
Yeah.
I'm not like, from my perspective, I don't see consumer facing agentic payments as being that distinct from what we already do in terms of like a trust to transact standpoint. Like I can already tell my Alexa to buy paper towels and, they have my card and I don't care, right? And I'm charged. And that's very similar. It's almost in the B2B world I'm very interested to see because there are still a ton of transactions that are not as easy consumerized. And so maybe that jump from, hey, you got to like fill out this thing and, in some cases send a check to you don't even have to have any UI. Maybe that will be a transformative jump.
I'll give you an example. Like, will there like be agents that manage payroll for companies and like pay people and like make sure they're all like, I don't know, like, I don't know if there's even a startup out there, but like think about the complexity of that, right? Like there's all a lot of humans involved. There's a lot of like processes involved today. Would someone like have an agent that literally does all that, make sure the payment happens, make sure it's successful? Like it just, to me, that future will happen some point. There's no question about it. I don't know the journey to that one for sure.
Yeah, that's interesting. I love that example. That's a perfect example, right? And you see the same thing with like all the AR, AP stuff. Like we've seen a lot of automation around that, but I feel like there's still way too much kind of W-2 like full-time involvement in some of these tasks, and they take time and they're painful, but they seem like great automation candidates for agents.
There's so many places in the workspace today which like have human involvement that probably agents can do pretty well. I think even that happens over time where there's like humans like evaluating and saying like, okay, that's good, to a world where it's completely automated, right? And agents literally logging in being like, okay, I'm going to push this payment now, and they do it like that'll be pretty cool when it happens.
I'm excited for that. I love it. Well, I got one more question, and then we can wrap here. As you kind of, we talked a little bit about it, but as you look forward to like the next 5 years, what are you most excited about with the work you're doing at ServiceTitan? Like, where do you guys, see the future headed here?
I'm really excited about like what's happening in the stablecoin space, because if you, one angle to look at it is like the networks are getting, like getting pushed out in some ways. Is that the thesis? I'm like very curious how that plays out, because if the thesis fully holds true, then there's a world in the future where like interchange goes down dramatically and stable coins is the way that we effectively transact. And what that means for Visa, MasterCard, I have no idea again, but like I think that's a really interesting thing to kind of pull that thread on, I think, in the payments world. And similarly in the rest of FinTech, I'm pretty excited about like what agents can do and what happens in those experiences. So I'm excited for that to play out.
I love it. All right. Well, Nick's got our final question. I asked my final one, Nick. So take us out.
Yeah, I mean, I think I just always like to come back to a lot of our audience. You're an early stage founder. You have a great, vertical AI, vertical software, SaaS platform, and you don't have payments at all. When do you think about, to explore it for the first time? When's the right time? Just like, what would be the one piece of advice you give that founder going into this vertical fintech journey?
I think the number one thing is get your foundation right. Like, make sure your core product works really, really well, and your customers are going to tell you, those 10 customers in your WhatsApp thread or your iMessage thread that are like, I want to find a way to make payments happen on this platform now, and they will tell you. And when you do that, it will be magical. And if you do it any other time, it will probably be more likely than not harder to make them work.
I love it.
Love it. Great advice. Awesome. Well, Rahul, thanks so much for joining us. This was a ton of fun.
This was really fun. Thank you all for having me.
Thanks for being here, man. Appreciate it.
Have a good weekend. Bye.